Ladies, gentlemen, if Santa Claus doesn't come to Wall Street in December, the Grinch hits the stock market in January. History says we're going to be talking about that history, but luckily for you, if you are a holder of the broader markets, let's talk about the S&P 500 here first, folks. You just hit all-time highs today. In fact, the market hit an all-time high, up 0.09% from the last high, and year-to-date up a whopping 27.7%. My God, if that is not a sign of hyperinflation or something weird, I don't know. Those returns are absolutely astronomical, but we're not into the end of the year yet. This is just the Christmas, the Christmas weekend rally. Am I right here, folks? Take a look at this. If you're holding the total market index fund, I'm sorry to say, but you're not doing nearly as well. I think from the last all-time high, it's still trading down just under 1%. But year to date, I mean, it's up 25.46%. So not like you're complaining if that's something that you're interested in here, folks. But let's talk about this article, and then we're going to dive down into my over $370,000 dividend stock portfolio, or, you know, whatever I think the best companies in the world are. I got to keep saying dividends for that YouTube algorithm, you know, but let's take a look here, folks, because things are getting a little bit nutty, interesting, and always fun looking back at these kind of historic returns over December, going back to 1999 when the market lost 0.4 or minus 4% here, folks. But take a look. It's only been once, twice, 3 times, 4 times, 5 times in the last, 22, 23 years here that the market actually finished in the red. So there's something about the end of the year where the markets just go up. And I think that could be maybe related to the fact that people get bonus checks. They're topping up their retirement accounts. You know, I don't know particularly. I think most people are spending money on Christmas presents, spent some money on Christmas presents. I don't know. I don't know what's going on here, guys. But let's take a look at January, because January tending to be red if the markets finish the year in the green. But who knows, right? We'll just see how this pans out. This is a fun chart to look at. Am I right? Am I right? Let me know what you think in that comment section below. But let's just take a look at the markets here today, guys, because it is the afternoon. And when I scrolled in here, I'm kind of blown away by the absolute amount of green that's going on again. And I think the most entertaining stock still has been Tesla for me. Elon Musk just paid like $11 billion in taxes, the most anyone's ever paid ever in history in taxes. And Elizabeth Warren was attacking him like she didn't even know that he paid taxes. The shit she was saying it seemed almost disgusting to me. And I found it really interesting because it kind of reminded me of Biden when they didn't invite Tesla to that big auto thing when they're talking about electric vehicles, and GM and Ford and all the major like OEMs and stuff were there. But it really kind of spoke to me that the government is really disconnected from what goes on in the market. I know many of us have all the time in the world to sit here, watch these videos, scroll around on YouTube, read forums, but I don't think Joe Biden, Elizabeth Warren, these kind of really older folks, unfortunately, I mean, they're old, right? Like, I feel like they're disconnected from what is actually going on in social media. And it kind of makes me feel like I lose a little respect for like the political system. Even though I'm not in the US, this is me judging you guys. These are the people that you elect, and this is how they speak. And if you want to go look that story up, by all means, go look up the drama between Elon Musk and Elizabeth Warren. But I mean, take a look at this. The only thing I need more in the green here is Facebook. Facebook, man, if that thing just takes off a few percentage points, it'll be doing pretty good. But let's take a look at the individual counts here, folks. We don't got to scroll through. I scroll through the numbers there every day. Starting off with my TF to the S to the A, it's just breaking all-time highs. If we can tap that 170 mark, 1,000 out, we'll be pretty much there. And it'll be fun to get the December charting performance for these accounts. But let's take a look. We got some dividends by the looks of it, $365 at some point to invest. Algonquin Power. Many of you Canadian fans of the Algonquin Power pays a massive dividend yield is finally coming back. I was down at a low of like 10% on this one, and it looks like we're finally coming back. I might actually just drop those dividends in there, but I'm waiting for January so I can add my $6,500, I think is what the contribution is going to be this year. Oh man, I love that. This account, guys, tax-free income in perpetuity for the rest of your life. That's what a TFSA should stand for. But take a look, guys. We got Apple here just crushing it. Microsoft, a lot of speculation if large caps are going to sell off into the beginning of the year, because I mean, Jeremy from Financial Education is speculating that basically a lot of people will start taking taxable gains in the beginning of January, because that way they don't have to pay tax for the rest of that year for like a year and 3 months until the next tax season rolls around. And I kind of applaud that strategy. I did that with MindMed this year. It sold it right toward the beginning of the year. And I'm probably not going to sell my tech giants here, guys. I don't really care what happens to them. They're dividend stocks. I'm OG to them. My buying prices are absolutely so insane that I don't know. I just don't see the point in selling them here. They're not like, you know, astronomically large weightings in the portfolio by like a percentage point. But let's talk about my managed account here. This is my primary account where I'm going to sell off probably Bank of Nova Scotia and TD. I'm going to use that capital and to rebuy back probably just TD in the TFSA. But yeah, other than that, I might add a little bit more TELUS Communications here as well. I got some of my Facebook position in my managed account here. I'm not going to be doing anything with that probably because I'm just way too bullish on Facebook. I thought I was going to sell it down, but then I'm like, I can't do it. I can't bring myself to sell the metaverse, not just the metaverse. But yeah, ever notice how funny it is that nobody really knew what the metaverse was? Facebook comes out of nowhere, talks about it, and it's like they own it all of a sudden. I saw Keanu Reeves actually complaining about it. It's really funny stuff.
Can we just not have metaverse be like invented by Facebook?
And you're not a fan?
No, but just the concept of metaverse is like way older than
it is old.
Facebook, man, they'd made one hell of an impact on that little promo they did about the good old Oculus here, baby, which I got it plugged in. But I've been playing this sucker every day. Sign up, add me to Facebook. We can play some games. It'd be great. I got so many games I'm playing on here, guys. A lot of fun. Population One, man, it's like the Fortnite version of Oculus. Absolutely love it. If you want to get together, hey, maybe we do some Beat Sabers together. I don't know. You should get it though. A lot of fun, man. It's cooler than anything. But let's take a look at my RRSP here, folks. This account actually, I think, just hit all-time highs today. VOO doing pretty good, up 5% since I was buying it. I know a lot of people were complaining because they bought VOO and they were flat on it because the market's been a little rocky, especially if you've been playing like VTI and stuff like that. But really liking my consumer discretion here. I've got like, oh my God, a lot of contribution room. I think I got like $10,000, $12,000 worth of contribution room for this account. I just have a hard time wanting to fund it because I don't have access to this money. This is like retirement money. So I'm going to be patient. I'm probably going to pay taxes this year, and maybe next year I'm going to focus more on finding capital to put in here. But for now, I want to keep my capital accessible. But either way, pretty happy with this account. It's just going to sit here, do its thing. I'll probably reinvest the dividends into VOO or start adding VTI because, again, this is like my long-term 30 years out, guys. I think I'm 30 years old, not going to be retired until 60. Can't touch this account till then, so let's just be patient, all right? Taking a look at my business account, my corporation. This is probably one of my favorite account right now because this is where I'm going to be primarily focused on growth. The reason I'm focused on growth in this account is because I get taxed a little bit more on certain things because, again, I already get a tax deduction on the income this corporation makes. So when you invest it, you're kind of perpetuating tax-deferred income almost that I'm not putting in my personal name. So I really kind of wanted to attain growth in here. So you'll notice that on the year I focused on buying Tesla. I got a huge amount of Facebook. I'm really happy. 40 shares in this account now. Only up 2%. But again, keep in mind, I wish I could have just transferred my initial Facebook position over to here because there's no way that my average cost is in the $327 range. It's likely closer to the $290, $300 range would be my guess. Because again, I had to shuffle stocks around when I opened this account up. But Google, guys, doing pretty good here as well. I mean, my total US investments are up 24.41% from May. And this isn't fully from May, but oh man, what a time to be just picking good companies. That's such a good return in such a short period of time. It's kind of nuts if you ask me personally. I mean, God, it's so great. Even my Canadian holdings here, my Algonquin Power, my Royal Bank, my Granite, these are really boring dividend stocks for most people, and I'm only down 3.7% somehow on Algonquin Power, but somehow on Royal Bank, I'm up 5.22%, and I only just bought this. But let's take a look here, guys. If we scroll back up to the top, we can see that the total return since May has been 18.26%. Not exactly all-time high, but thanks to some contributions, we're sitting about almost $85,000 in less than a year. Keep in mind, 20,000 of this was contributed from my personal name, and then the rest of that has just been me working away in this corporation and adding capital as time has gone on. This doesn't constitute any of my cash position either right now, but oh my goodness, guys. This has been a great start to the holiday weekend. If the markets can just close like this now, most of us will be celebrating time with our families, probably feeling a little bit better about our financial situation. And as promised, guys, we're going to try and come back tonight and do a live stream. I might try and do it on the Passive Income Educator, our live stream channel. I'll leave a link in the description below if you guys want to join us there. I don't know if I'll try and do a live stream here on this channel, perhaps on Saturday or Sunday on Boxing Day. I just want to spend some time with you guys. I'm spending a lot of time with the family. I don't got a lot of work going on right now, so I got nothing but time. And in light of that, folks, just let me know how your portfolio is doing in that comment section below. But stay cool, stay awesome, and I look forward to catching you tomorrow.